Are you curious about the stock market, but not sure where to start? Well, you're not alone. Many beginners feel overwhelmed when they first hear about investing in stocks. But don't worry, today, we're going to break it all down in simple terms and give you essential stock market tips to help you begin your investment journey. Whether you're looking to grow your wealth or simply understand the basics, this video is for you. Before we dive into the tips, let's first talk about what the stock market actually is. In simple terms, the stock market is a place where buyers and sellers come together to trade shares of publicly listed companies. Think of it as a giant marketplace, but instead of food and clothes, people are buying and selling pieces of companies. Now that we know what the stock market is, let's dive into our top 5 tips for beginners to help you make smart investment choices. Tip number 1. Understand the basics before you start. First things first, you need to understand the basics. This means getting familiar with terms like stocks, bonds, dividends, and capital gains. There are tons of resources online to help you learn, from YouTube videos, like this one, to articles and courses. Taking the time to understand these terms will set a solid foundation for your future investing. The more you learn, the more confident you'll feel when making decisions. Tip number 2. Start small. Don't dive in with everything you have. A common mistake new investors make is thinking they need a large sum of money to start. But that's simply not true. You can begin with just a few hundred rupees or dollars. Starting small allows you to learn without risking too much, and as you gain experience, you can increase your investments. Tip number 3. Diversify your portfolio. Don't put all your eggs in one basket. Diversification is key. This means investing in different types of stocks, sectors, and even countries to spread out your risk. For example, rather than investing all your money into one tech company, consider spreading it across various sectors like healthcare, finance, and even some international stocks. This reduces the chance of losing everything if one stock performs poorly. Tip number 4. Long-term focus over short-term gains. While the stock market can be exciting with its ups and downs, the real money is made over the long term. Avoid trying to time the market by buying and selling frequently. Instead, focus on holding your investments for years, as they typically increase in value over time. Think of it like planting a tree. It might take time to grow, but eventually, it will bear fruit. Be patient and allow your investments to grow steadily. Tip number 5. Keep emotions in check. Lastly, always keep your emotions in check. The stock market can be volatile, and it's easy to get caught up in the fear of losing money or the excitement of sudden gains. Emotional decisions can lead to buying high and selling low, the exact opposite of what you want to do. Stick to your strategy, and don't let fear or greed take over. So, to recap. 1. Learn the basics before you invest. 2. Start small and don't rush into large investments. 3. Diversify your portfolio to minimize risk. 4. Focus on long-term growth rather than short-term gains. 5. Keep your emotions in check for better decision-making. If you found these tips helpful, don't forget to hit that like button, and if you're new here, subscribe for more useful investment and financial content. Drop any questions or comments below. I'd love to hear your thoughts and help you out.